Then second example is cash received against trade receivables. So obviously what are trade receivables? Now you should be knowing about trade receivables. Trade receivables are including two things, that is debtors and bills receivable. So either you will be receiving cash from your debtors or you will be receiving cash against your bills receivable when the due date will be there. So obviously that will be also termed as cash inflows. Then cash received for interest and commission. So obviously if you are receiving interest in any terms or you are receiving commission from somewhere, that will be also a cash inflow. Means your cash balance or bank balance should change and it should increase, only then it will become an inflow. Cash received from sale of fixed assets, you are receiving against some payment when you are selling your fixed assets. Loans and advances received. So if you are receiving any loan or if you are receiving any advance, then even your cash and bank balance will increase. Proceeds from issue of shares and debentures. Obviously your bank balance will increase. Cash received for commission and royalty. Commission was earlier also mentioned. Royalty, you are receiving some payment. So that's why your cash and bank balance will increase. Insurance claim received. So if somehow some loss is there and you have an insurance for that and you are receiving that insurance claim from the insurance company, even then your cash and bank balance will change. So this will also be an inflow of cash. Means any sort of cash you are receiving, it can be of any source. If you are receiving it in cash or in bank terms, then it will obviously classified as cash inflows. The purpose is that you should be much able to classify the cash flows into inflows and outflows. You should be able to decide that. That's why I have made this long list of examples. It should not be that it is outside the activities of business. It should not be considered as cash flow, inflow. That confusion should be sorted out. Cash received from sale of long-term investments. So if you are receiving cash from sale of fixed assets, investments are also part of your non-current assets. So if you are receiving cash from their sale also, then it will be considered as cash inflow. Now, what are cash outflows? So cash outflows means all transactions that lead to a decrease in cash and cash equivalents are classified as outflow of cash. When your cash and bank balance will be decreasing, that will be termed as cash outflow. Now, a few examples again for your reference. Cash purchases, you are purchasing raw material, you are purchasing goods for trading. So then you will be making the payment, and when you will be making the payment, your cash and bank balance will decrease. Similarly, if I say a credit purchase of goods. So in credit purchase of goods, you are not paying any cash. So your cash and bank balance will remain intact. So in that case, we can't say that it is cash outflow. So simple thing is that here you will be considering only and only cash transactions. Cash paid against trade payables. Obviously, trade payables are again having two components. One is creditors and one is bills payable. Either you will be making the payment for your creditors or you will be making the payment for your bills payable on the due date. So that will also reduce your bank balance. Cash paid for expenses. Obviously, you are paying salaries, you are paying rent, you are paying electricity bill, traveling bills, and lot of expenses are there, printing and stationery, postage, fuel, lot of expenses are there in the business. So whatever expenses you are incurring and you are paying in cash, that will also be an outflow of cash. Cash purchase of fixed assets or long-term investments. Simply, if you are purchasing any machine, any plant and machinery, any equipment for your working or office, any long-term investments in that you are investing in that long-term investment, so you have to make the payment, you have to pay the cash. So obviously your cash and bank balance will be reducing. That will also be a cash outflow. Loans and advances given. If you are receiving loan, your bank balance will increase. If you are giving loan, then obviously your bank balance will decrease. So that will be also a cash outflow. Loans and advances repaid. The loans and advances which you have received here, if you are repaying that loan and advances, so obviously repayment of that loan and advance will be a outflow of cash. Cash paid for redeeming preference shares or debentures. Similarly, if you have issued the preference shares here, so you have received the cash, now you are redeeming the preference shares, means you are returning their money, their capital amount. That's why it will be outflow of cash. Then here you have issued the debentures. At that time you have borrowed the money from the shareholder, from the debenture holders. So it will be an increase in cash and bank balance. It will be an inflow of cash. But similarly, after 5 years, 10 years, 15 years, 20 years, whatever the duration you have decided for your debentures, if you are repaying the amount, then it will be a redemption of debentures, and redemption of debenture means that you are paying back the principal amount, and that will also be an outflow of cash. Now, when you are repaying the principal amount, that will also be outflow of cash. And if you are paying dividend to preference shareholders, or if you are paying interest to debenture holders, that will also be outflow of cash. Similarly, you are paying dividend to equity shareholders, that will also be outflow of cash. So whatever payment you are making in any terms to anyone, if your cash and bank balance is reducing due to that, that will be termed as cash outflow. So I think now meaning of cash flow statement, that we have discussed, that it is a statement, and the cash flow means that cash flow can be inflow as well as outflow of cash, that we have discussed, and it may be due to three main activities that we will be discussing. What are operating activities, what is investing, and what is financing. But whatever the reason may be there, if you are receiving cash, it will be termed as inflow of cash. If you are redeeming the, if you are paying the cash, paying through cash, that will also be termed as cash outflow. So I hope meaning of cash flow statement and a meaning of cash inflows and outflows is also clear. If still any queries there regarding, first share it with me. I am opening the chat box.